Alright, what's good, everyone? It's Saturday, 5 p.m. out here, Ottawa, Ontario, Canada. Listen, I'm here to make a day trade video and trading video in general. And we're going to cover rules and guidelines that I follow and that I must follow and that you must follow, that Gann followed, great traders follow. I'm currently in a position right now, but I'm scalping. I'm scalping just because basically that's the type of market that we're in. So first thing you have to do when it comes to trading, you have to define the market that you're in. Some people say that there's 6 different market types, 7 different market types, but realistically they break down into 3: up, down, sideways. Okay, and then expands from there. But realistically, I have 2 laid out right here that you have to determine, and it's quite obvious sometimes to understand if we're in accumulation distribution or decision mode, or if we're in a trending market, which is quite obvious. Is it going up or is it going sideways or down, right? So let's open up just a chart of Bitcoin, and then we'll talk about the rules. Okay, if you take a look at Bitcoin for the hour chart, you can see that we're kind of chopping around. Even if you zoom out here, guys, Bitcoin's a bigger range, so we're chopping around. Okay, in my opinion, this is either accumulation or distribution. I'm not sure yet, but that's where you have to start thinking about. And here's my position right here. Okay, so we'll talk about my rules and my guidelines. So right, so accumulation and distribution, range bound, right? So you're going up and down, and the guideline here that I would say, you're scalping, you're getting in and out, you're not holding your trades. This is the most important thing. And Jesse Livermore, at some points, he was ignoring this and he was waiting for this, because this is where you make a ton of money if you understand how to pyramid right. So let's talk about this, because this is what we're in right now, is accumulation distribution. How are we going to find out if it's accumulation or distribution? As simple a question of supply and demand, right? Supply and demand. When supply exceeds demand, so there's more to offer, prices fall. When demand there's more demand for it, prices rise. So that's kind of something that you have to meditate on and think about for Bitcoin. In the case of Bitcoin, 21 million market cap, with a sober mind, right? Without a bias, like, yeah, you love Bitcoin, whatever, but really understand, okay, is there more supply or is there more demand? Are people trying to sell this thing? Are shorts about to get squeezed? That's artificial demand. We'll get more into that when it actually happens, okay? So I usually never dollar cost average down, but since we have computers, it's acceptable in accumulation distribution ranges. I'll tell you why. If I open up my trade right now, I could have even capitalized more on this down move. So you keep scalping with the stop loss right underneath. Guys, this is a range that I'm talking about right here. So there's a top and there's a bottom. Okay? There's a top and there's a bottom. There's 5 waves, 1, 2, 3, 4, 5. Realistically, I should have probably taken my profits at the 382, but that's just TA strategies. I think we're in distribution, but we'll see. Okay? That was a perfect touch of the moving average, and then a huge dip. So that could be, so you're scalping. The whole point of this, in distribution accumulation, you're scalping, okay? With low risk, high reward trades. You dollar cost average down, it's acceptable with a very tight stop loss. Very tight stop loss. So that's where you wash the order book. If you even want to trade, if you like to trade, then this, strategy is for you. You probably would use a lot of leverage at the bottoms of a range. Okay, and then the next is markets only trend. What's the percentage of the time? It's not a lot. I think it's 30% of the time, something like that. So markets only trend about 30% of the time. Here, I guess every market is a little bit different, but I would say it's 30%. I'm pretty sure. So yeah, 30%. Okay, and then it ranges 70%. So what are you going to do with your time of 70%? You have to stay disciplined with a tight stop loss. Okay, and then whenever accumulation distribution breaks either up or down, that's your trend, and that's what you have to start trading. So fast moving volatile markets, there's two different trends. Okay, to make it kind of simple, there's a slow moving trend, and then there's a huge fast moving volatile trend. I'll show some examples here. I'll use the exchange. So for example, this is a fast moving trend, right? So this is what they call volatile bull. Okay, this is up, but it's a slow moving trend. Up, slow moving trend. And then this is a volatile bear, right? This is a volatile bear. This is um, like a slow bear. What's it called? Like a slow bear. So with that being said, guys, I think that we're going to probably come down because we're at the top of the range, and we're probably going to come down. And I mean, so to identify a range, you have to basically go on the weekly, the monthly, the daily chart. So go in the daily chart and kind of mark these areas up. So past 11,000, that's a break, and we're probably going to move down very fast, and that's a trend downwards. Okay, for the bulls, they're going to have to wait on this daily close, which happens in about 6 hours, for us to retest the range up here. That's about 5%. So what you could have did is you could have bought it here with the stop loss below 11,000, which would have gave you about 1% stop loss, and try to ride it all the way to the top of the range. But you also have to understand that a lot of people have done that, and that it increases the supply, right? So once we actually get here, increases the supply, distribution confirmed, we're probably going lower. Okay, so let's go back to our sheet here. In a trending market, you never want a dollar cost average down, always adding to the trend. So always dollar cost averaging upwards. Always dollar cost averaging upward. That's the rule. Okay, so fast moving volatile market, you hold them with trailing stop. You pyramid if you want to, if you're skilled enough and you understand how to leverage trade. And plus the option to be a connoisseur. Now this is a skill. This is almost like trading in and out of trends. So you're using scalping time frames, and you get in and out, and you skim profits at the times where you think it's going to come down a little bit, right? So you take 10, 25, whatever percentage of your profits, and you re-add to your position at a lower price. Now that's a skill, and that's really how you can get really wealthy fast. Also, pyramiding is a skill. Pyramiding is a skill. You need rules for all these things. This is just a very basic concept of uh, how to trade. So there's, in my opinion, to break it down really simple, there's two markets that you can trade in. There's a range bound, and there's a trend. That's all I wanted to bring to your attention on this video. I hope everyone is trading safe. Let's take a look at my position and try to learn. As a trader, you want to learn from your mistakes. If you're in this for the long run, you want to write down, and you want to really understand what's the, like, how you're going to really be successful in this game. Okay, so realistically, I was going to sell right here, and what is that? 1, about a 1-to-1 at that point. But I'm aiming for the top of the range. And realistically, I count 5 waves here, so there's a possibility that this thing is going to, break the top. And what does that mean? Basically, if it breaks the top here, we're in a confirmed bull, right? Bull trend. So we'll have to see how the reaction plays out. Now, the order book is extremely important for this. So yeah, that's basically all I wanted to say for this video. I hope everybody is having a great day. I hope, oof, some volume coming in here. You guys are trading safe, okay? Have a great day. Peace.